to another episode of Frank Perspectives. And today we have two esteemed panelists, Vasant Srivastava, who is a senior banker with more than 2 decades of illustrious career in leadership positions across many banks, including HDFC Bank, Ujjivan, Small Finance Bank, Citibank, and CRISIL Limited, with the cross-functional experience covering strategic planning, risk management, business development, and analytics. He is an IIM alumnus and is now based at Bangalore, advising companies, mentoring startups, and he has a very keen interest in analyzing global financial and technology trends. So very warm welcome to you, Vasant.
Thank you.
We also have Arijit Chanda, a chartered and cost accountant by qualification with more than 2.5 decades of multifaceted experience across banking and consulting. Again, engaging multiple functional areas from strategic planning to transformation to business development to risk management. He has worked in leadership positions in Citibank, Tata Capital, and Fullerton before establishing management consulting firm called Sambit Insights 10 years back. His illustrious list of clients today includes leading banks, NBFCs, HFCs, advisory firms, and many other national and international organizations. A very warm welcome to you, Arijit, as well.
Thank you. Thank you, Amit.
Challenging times for all of us. Impact of COVID is going to be very, very deep. And it seems very likely that the recovery is going to be a long haul and painful. Now, of course, there are various data points coming in from everywhere, citing multiple sectors which will get impacted. So today's panel discussion, what I want your perspectives on is to evaluate the impact specifically on the MSMEs and the roles banks can play in the recovery. So my first question is to you, Vasant. How do you see the overall economic impact of such pandemics? You are a keen observer of global events. And how, in your view, do you see this panning out for India across different industry segments?
So if you look at global pandemics over the last 100 years or so, there have been 3 major pandemics which have affected most of the countries in the world. The oldest and the most famous, or infamous, I should say, is the Spanish flu, which was in the period 1918 to 1919. So if you see all these flus, they came in waves. So it's not that once the impact of the flu wanes, then it is shut open in a shut case. Here in 1918-19, it came in 3 phases. And the second phase, in fact, was the most devastating in terms of loss of lives. Similarly, the Hong Kong flu in 1967-68 also came in 3 waves. And here again, the second wave was particularly severe. And then, it tailed off. So the impact is not only going to be on the lockdown period or during the partial lockdown period, but is also likely to be extended over a greater period of time, most probably the entire financial year, financial FY 2021. And therefore, this impact needs to be assessed along those lines. Secondly, obviously, in a virus pandemic, face-to-face kind of businesses and services in particular are likely to be impacted more. So whether it is travel, tourism, hospitality, restaurants, even retail business to some extent is going to be impacted much more. And most importantly, over a very long period of time.
So very, very interesting observation, Vasant. So what I'm understanding from there is that the timelines that you're projecting is not only about lockdown, it is also about possible resurgences which may happen over a period of time, not only in India, but across the world. And therefore, it's tough to predict what may happen and how long it may take for us to recover.
True.
So Arijit, I want your view on similar lines. Where do you see, which sectors do you see the impacts coming in most significantly?
I think before I dwell about on the the extent of impact on several sectors, I think the uncertainty of the extent of timeline of the lockdown, if it gets longer than envisaged on certain pockets, hotspots as we call, then perhaps the impact on the industry or the industry sectors and customer segment must be much, much higher than we can currently envisage. In addition to what Vasant has mentioned on services, which is true because that's a substantial part of our GDP, the second biggest impact is likely to happen on the industries, on the manufacturing segment. And when we are talking about manufacturing segment, we are talking about the auto segment, the auto component segment. We are talking about building material segment. We are talking about consumer durable segment. Various segments which are likely to get impacted. So substantial manpower, and this is going to happen because of multiple reasons. One, if you see the government's intent, they are not allowing to run multiple shifts. They wanted to do it with proper social distancing. So that means the capacity utilization is not likely to be high at one go. It is going to be staggered. There is going to be challenge due to logistic issues to get the raw material, the supply chain side, and also the impact on labor, especially the casual labor, which many of them have actually started moving back to their villages. And because of that, the impact on the manufacturing side, in addition to services, will be quite severe. And between the type of jobs, I think the impact will be much higher on the blue collar because there is a large, nearly 25% to 40% casual labor, depending on which industry you're talking about. The other thing is that is relevant to the MSMEs, the impact will be seen across the value chain, from the top to the very bottom on either side, on supply chain, supplier side or distributor side.
Yeah, so just to add to that, therefore, if you break it into the kind of segments which will get impacted, large corporates, medium corporates, and MSMEs, in this, due to COVID-19, as we mentioned, a lot of service sectors as well as the supply chain will get impacted. So if we break it down into these segments, then the MSMEs are likely to be, the biggest casualty.
I agree. Actually, I agree, Vasant. And the most important is that within the MSME, I think the lower end, micro and the small businesses are going to be more largely, more impact will be there. Especially the semi-formal category. Many of the small businesses are not registered for GST and all, even for the composite ones up to 2 crores. So they are likely to be more impacted.
Sure.
So basically the key challenges which both of you are articulating, one is of course the Vasant mentioned about services getting impacted and a lot of impact on the job losses. And similar situation, Arijit, you mentioned on the manufacturing side because of already the production capacities were not fully utilized, and this creates further reduction in the ability to produce because of the norms which are expected to come. Building on the MSME impact, both of you mentioned the job losses, both in the services and the manufacturing segment. But the real symptom is going to be the constraints on the cash flows with subdued demand. And in case of MSMEs, it is likely that delayed payments from the corporates will further create the constraints. Now, with this in mind, how do you see MSMEs can cope up with the situation? Arijit, you can go first.
Yeah, so I think the challenge with the MSMEs currently is that the debtors realization in terms of the corporates paying on time on the commercial, their cash flows will get impacted. The other one is their access to capital, especially the debt capital, because part of the working capital, etc., would have already gone into managing the expenses. So I think access to capital, debtors realization, managing for maintenance, etc., will take a lot of time. I think they will require some support from the banking and the financial institutions. I think the government has to do much more in pushing corporates to pay the MSMEs. Eventually, maybe even platforms like trades can be leveraged so that their liquidity is actually preserved.
Vasant, your views?
Yeah, so I think we must look at the backdrop again against which this event has occurred. So the last 3.5 years already, the MSMEs are having, issues in terms of their business levels as well as liquidity. I mean, starting from demonetization and then GST, as well as the slowdown in the economy. So therefore, in terms of resilience, in terms of additional cushion or buffers that they have, is much lower than even perhaps the last financial crisis of 2008.
True.
And therefore, all the more reason, what Arijit mentioned, there needs to be some support in terms of their working capital cycle being improved, that is through faster payments from debtors, using platforms like Trades perhaps to do it, or in any other form support from through funding means as well as through the government to facilitate the impact, to lower the impact of this crisis.
So both of you mentioned access to funds and some support coming in, and you're right, Vasant, saying that the situation, the way it has evolved, may not have left them with much of their own equity being available with them. So in terms of the roles that the banks can play, and I would want your views specifically coming in. There are two broad tiers of funding, which one funding for the MSMEs. One is, of course, through the larger banks. Second part of it is, and much deeper part, which goes to the bottom of the pyramid, is through the NBFCs, the MFIs, also the small finance banks. So how do you see this banking support playing out, and whether you think banks would have their own capacity to increase the credit offtake?
Yeah. So if you look at the micro enterprises, the really small, semi-formal or the informal enterprises, a large part of the funding is done, like you rightly mentioned, through NBFCs, small finance banks, and microfinance institutions. Therefore, they would be a very important conduit for financing their businesses or their survival first and then growth eventually. So in terms of how these organizations would shape up, one is that NBFCs, for example, themselves do not have moratorium on their loans, while a moratorium has been given on all other kinds of loans. Now, if they are to fund or these small customers, they would need moratorium at the bare minimum, so that they have liquidity to be able to lend to some of the better customers. The second is each NBFC or MFI or small finance bank will look at which segments will probably benefit from this or will come out better at the end of this. And also will look very closely at their existing portfolios to see which customers are better in terms of leverage, in terms of liquidity position, and in terms of repayment track record. I think that's a wealth of information that they have, which they must look at very closely. And along with interaction with these customers, even if it is on phone or in any other form, to identify those kind of customers or segments where they can find. I think it is an opportunity to tooth comb your portfolio and then look at it very closely and help the better ones grow faster.
Arijit, your perspective?
Yeah, I want to break this up into different parts. I think we should look at the financial services spectrum on a wider scale, as there are multiple players. There are public sector units, there are private sector banks, there are NBFCs, there are HFCs, there are MFIs. And each of them plays a very important role in how they can nurture the MSMEs. First and foremost, I think the government public sector banks needs to perhaps up their role much more, because their motive, private sector bank motive or profit maximization is perhaps not the right thing at this point of time. So they need to step in and perhaps provide more direct credit. They can also support the HFCs, the MFIs, and the NBFCs, which are focused on MSME financing. There are many guys who are focused. HFCs also do a lot through the loan against property, because they will require all the support that they deserve. Specifically for the MFIs, you will break it a customer segment, the very, very micro homegrown, which is the largest segment, perhaps will require a bigger amount of funding, because they are also likely to have a political fallout of that. So they have to be taken care. I think the other important role that can come into play, which a lot of people are not talking about, is the trade guarantee scheme. The trade guarantee scheme has to play its right role. Perhaps this is the time when it has to do that, and it has to be given much more support. So that will enable the financial institution to, refine their risk appetite to give money to MSMEs. This is not the time to actually cut lines, be conservative. This is the time, I think, for the banks to become bolder. As I said, there will be 3 different customers. There'll be good, bad, and the ugly. Bads are anyway known. There'll be a lot of customers who are good will become marginal, and some of the marginals will propensity to be bad. And it could be only because of certain situations. So if you assess their intent is correct, if you assess their business viability is still there on a operating break-even level, then I think the banks and financial institutions should take an extra mile to support.
Another dimension, Arijit, which you referred to earlier, but I want you to elucidate a little bit more in terms of regulators' role. While 3-month moratorium has been given, do you think that suffices in terms of support to the banking sector?
I think it is very inadequate. I think I have also made multiple suggestions to them. I think first and foremost, this should be at least be done for 6 months to start with, because 3 months is a very short window. Because as I said, if you're starting from zero capacity to come up to where you were, it can't be done in 90 days. Correct? It has to be, may go live. Second, I believe a substantial part of your customers will actually go through restructures, because you have to start marrying your cash flows with their future cash flows for your EMI. So this restructures by standard definition will make this account substandard. But I think special regulatory dispensation is required. That all restructures done over the next 6 to 12 months, they should be considered standard, provided they were current prior to the 1st March. The 90-day NPA norms, 90-day NPA norms needs to be extended to 180 days as a special dispensation for next 12 months. I think any regulatory discussion has to happen over the next 12 months. I think these short-term measures will create confusion. And to a point that Vasant mentioned very aptly, don't make any sense of why the banks are not extending the same moratorium or the regulator to the NBFCs and all. Because substantial portion will fall due over repayment, and with no cash flows coming in, actually a lot of non-financial banking institutions may actually default. So I think multiple things can get done, and the liquidity measures are one thing, but I think on asset classification, the way it is, there needs to perhaps undergo substantial change for the next 12 months.
If I have to just summarize, impact is going to be unpredictable because you do not know how the situation pans out. It is going to be much more severe on the MSMEs, and banks have a pretty significant role to play, and so is the regulator. In terms of coming out of this, is there anything that you see at the MSMEs end wherein there are opportunities this turmoil is going to throw up? Primarily, are there any specific sectors where from a medium term to long term, where new opportunities will come in, wherein MSMEs can either change their models or enter into new diversifications, which can help them sustain and grow? Vasant.
Yeah. So every crisis brings in new winners. We have seen this time and again, not only in India but world over. If any of us remember what happened post the 2008 financial crisis, one of the industries which really took off in India was the telecom sector. So from around 300 million subscribers, it increased fourfold to 1.2 billion subscribers in about 10 years since then. A lot of infrastructure was built for the telecom growth at that time. and all the ancillary units relating to it, whether, you know, installing these towers or whether it is the mobile distributors, retailers, servicing, and so on and so forth. A lot of them were MSMEs, and therefore they rode on that boom. Similarly, post the 2008 crisis, there was a steep excise duty cut on automobiles, and that started the automobile growth. And that really also helped a lot of SMEs in terms of their suppliers along the supply chain, as well as distributors, you know, and dealers to grow strongly. So similarly, in this particular event, I think one of the biggest beneficiaries would be pharma, medical equipment, and pharma-related intermediaries, chemicals, everything related to that. So definitely, in terms of the entire supply chain relating to pharma and medical equipment, which was something that was, you know, not too much in everybody's radar, will now suddenly come up. And one should see some part of the supply chain, especially suppliers or even distributors and sellers, gain out of this. The second is what is being talked about a lot is that some of the export supply chain business should move to India. And if the government really taps this opportunity well, we could see some parts of the supply chain in terms of manufacturing for electronic goods, for automobiles coming into India. And these will be leading for the SME suppliers to these segments. So I think in terms of both export as well as these segments benefiting out of the crisis, I think SMEs can look at growth opportunities substantially.
Telemedicine, is there an opportunity there, Vasant?
Telemedicine is an opportunity, but whether it will be there for you know, a lot of the SMEs, it'll be a very interesting space for PE-backed or VC-backed you know, enterprises for those kind of SMEs, but not the traditional formal or semi-formal kind of SMEs.
What is your view on the opportunity sectors for MSMEs which this turmoil may bring in?
So I think first and foremost, I believe that this is a watershed moment from the perspective of MSMEs, how they decide to transform themselves. And it is pretty critical that they do so. And I think it will happen on two levels. One will happen on the business model and on the operating model level on an individual basis. The second will happen on a collaborative basis. So let me give you an example how this crisis has also created opportunity in changing in a collaboration basis. So suddenly there has been an impact on distribution. And today you would see people are collaborating with Ola, Uber to ferry passengers, to distribute grocery, to many other things, which were purely just passengers, you know, supplying, you know, providing the last mile. From the education side, for example, the online education will take a big thing, and many of the traditional old education institutions now will do a combination as a part of the change in the business model, partly online, partly. If you look at the back office, for example, the smaller, there will be more work from home institutions which will say that you will have to have maybe 20, 10, 15, 20% of your workforce working from home, whether it's telemarketing, whether it's telecollections and all that. And this is going to happen mostly at the lower end. However, if we want a transformational change for the MSMEs, I think it will happen both through government initiatives, initiatives from the industry and from the banks. Because I think it will be time when people will figure out the phygital will become a way of life going forward in principle of social distancing, which basically means that the MSMEs will have to start making investments in automation, in digitization, etc. And it needs money. They may not have the equity, so the banks and all will have to fund it. There has to be policy initiatives which provides tax breaks, etc. to MSMEs to do it. MSMEs will go nowhere because 40% of your GDP gets done, but how they do it. The other big opportunity I see on a policy level is there will be lot of work. So today on the input side for Indian manufacturing, nearly 40 to 45%, 20 to 45%, depending on which industry, is dependent on a foreign component. If that component has to be made in India, and many of them will get done by tier 3, tier 4, so more manufacturing capability is moving away from China, which was basically low cost. And they have to be supported with plant and machinery, space, area, incentives on electricity rather. So if with a push from the government and facilitating with banks coming forward to lending them, I think we will see perhaps growth in MSME, provided they have the openness to change and understand that the way of life going from MSMEs will change for good. So yes, there will be challenges in the short term, but I think there are many, many growth opportunities through collaboration and through changing their business operating model for MSMEs to come forward.
Very interesting observations, Arijit. And of course, yes, these are challenging times, but the resilience is also tested during these times. So even in the MSME segments, those who can strategize properly and find out opportunities can therefore look at sustaining themselves for a long period of time. Now, as we come to the close of this panel discussion, I want your last comments, closing comments in terms of what you see is the overall picture, and also a mention of the silver linings that we may have post-COVID.
So silver linings will start from how soon the lockdown or the need for lockdown ends, because I think that's the first milestone that everyone is looking at. The sooner that comes, I think, the better it is. The second thing is that there will definitely be greater amount of interest as well as investment in pharma, in medical equipment, testing, and the like. So that's the second very positive thing. The third, like Arijit mentioned, that phygital will be the way to do most businesses, most importantly. But above all this, to kickstart anything, you need something to take the lead. And last time, after the 2008 crisis, the government had cut excise duties on automobiles, had cut excise duty on steel and cement, and that and had stepped up infrastructure construction of roads, and that had kind of kickstart the growth, because once the momentum picks up, then a lot of private sector investments, a lot of other institutions will come to start lending. And I feel that again it's an opportune moment to again kickstart it, led by the government, led in some big sectors which will provide employment as well as the cash flow movement. So the whole engine restarting has to happen from some of these big sectors.
So you see a big role for the government to bring in the significant or material impact in kickstarting the economy, and possibly then the new opportunities may encounter the momentum.
True.
Arijit, your views?
Important is that there has to be fiscal packages that should come through the government. But I will focus on MSME. I will say two things. MSME is broken up into two parts: the export-oriented and the domestic. So the export-oriented obviously has to be given more incentive, to push the exports, but it will still depend on slow recovery of demand globally. Similar to 2008, but the domestic demand to a great extent and to salvage the situation, we have to make sure we kickstart the economic stimulus so that there is some demand. Obviously, it will be sectoral. And there has to be a greater focus on creating more made in India manufacturing, tie up with countries which can work with a lot of investments to kickstart. I am sure with the regulatory dispensation, the financial package that the government is an individual endeavor for SMEs to survive and grow. And as Vasant rightly mentioned, the focus on the domestic side, it would be something that we should perhaps focus more right now for the MSMEs to revive.
Thank you, Arijit, and thank you, Vasant, for taking the time out today for having a discussion with us. And very interesting points both of you have made. And we hope banks will be able to step up, government, regulators will be to step up. And so would MSMEs, beyond just waiting for the support from coming in from the financial services sector or from the government. They would find out their own opportunities in some of the segments and try to see where they can take their own growth levels.
Thanks, Amit. It was a real interesting discussion.
Thanks, Amit, and thanks, Vasant.